and again further focused on equity, India has one of the most liberal tax regimes. Today it is available for Indians investing in India. On equities, STT is all that you pay, virtually. Between Mauritius and India, no tax on short or long-term capital gains and no tax on dividend. In the hands of Indian investors who receive dividends from Indian equities, no tax. Of course, there's a dividend distribution tax which the companies pay. But so the tax framework as it relates to investment activity and particularly to equities is extremely favorable. And as we start seeing the market maturing and wanting to have Indians get exposed to a diversified portfolio of investments internationally, I'm sure the tax framework will be positively reacting to the increasing demand from investors. Last point I'd like to make is that it's going to be left to the innovative abilities of producers of financial products to make sure that they're able to address the regulatory compliance issues on both sides of the country where the investment originates and where it actually resides, and also to take complete advantage of the double tax avoidance treaties between the two jurisdictions in which investment activities are being carried out. So that will be something that all of us in this room will have to look at. As IFAs, we'll have to look at it in terms of selling the product. As producers, we'll have to look at it in terms of crystallizing the product. As regulators and as people who are trying to make sure that the integrity of the financial system stays, to make sure that it is fair, equal opportunity is given, and the safety, more or less, of the investor, to the extent that regulation can make it safe, does happen. So that is the real challenge that I see in the tax fused with investment framework.
Can I ask one question to Shailesh Bhai? From an investor point of view, not the double tax treaty and the wider, from an investor point of view, if I invest in a domestic mutual fund and the fund, an equity fund, and they give a dividend, I don't pay any tax. And if it is 1 year after, I don't pay any capital gains tax. But the same thing doesn't happen if I invest in 100%, invest in a fund that invests 100% abroad. Then the dividend they give me is taxable.